Welcome. If you're ready to build real wealth and achieve financial freedom, you're in the right place. We're going to dive into 5 essential money habits that can transform your financial future over time. This video is designed for beginners and students, offering clear, actionable steps. Forget complex jargon. We'll focus on the foundations of lasting financial success. Why does this matter now? Financial freedom isn't about being a millionaire tomorrow. It's about giving yourself choices, reducing stress, and securing your future. These habits are the roadmap to control your life, not be controlled by money. Here are the 5 habits we'll cover: creating a budget, building an emergency fund, avoiding high-interest debt, investing consistently, and harnessing the power of compound interest. Let's start with the absolute foundation, your budget. Habit number 1, creating a budget. This is the simplest, yet often most challenging habit to adopt. A budget is simply a plan for your money. You need to know exactly where your income is going. Are you spending more than you earn? Are your habits aligned with your financial goals? Tracking your expenses is the first step to financial control. A great starting point is the 50-30-20th rule. 50% of your income goes to needs like rent and groceries, 30% to wants like dining out or hobbies, and 20% dedicated to savings and debt repayment. Keep it simple and trackable. Habit number 2. Building an emergency fund. This is crucial for financial stability. An emergency fund is liquid cash set aside for unexpected crises, like a sudden job loss or a major car repair. Think of it as a financial shield that prevents you from going into debt when life throws a curveball. The goal for most people is to save enough cash to cover 3 to 6 months of essential living expenses. Start small. Even saving $50 a week can build a significant buffer over time. This fund gives you peace of mind. Habit number 3 is avoiding high-interest debt, one of the biggest destroyers of wealth. High-interest debt, like credit card balances or payday loans, is financially crippling. It means you're paying excessive interest, which is essentially throwing money away. Every dollar you spend on interest is a dollar you can't save or invest. The actionable advice here is simple. Prioritize paying off any debt with interest rates above 8 to 10%. Focus on eliminating those credit card balances first before prioritizing investments or other savings goals. Habit number 4 moves us into growth. Investing consistently, specifically using index funds. Once your budget is set and your emergency fund is growing, it's time to make your money work for you. Investing can sound complicated, but it doesn't have to be. Think of it as planting a financial seed. Index funds are investment vehicles that hold a basket of stocks, tracking a major market index like the S&P 500. They are low cost, diversified, and historically reliable. The key is consistency. Regularly deposit money, regardless of market ups and downs. Finally, we arrive at the magical habit, and arguably the most powerful force in finance, the power of compound interest. Compound interest is interest earned on your initial principal and on the interest you've already accumulated. It means your money starts making its own money, leading to exponential growth over time. The greatest advantage to compounding is time. Someone who starts investing small amounts in their 20s will likely end up with far more wealth than someone who starts investing larger amounts in their 40s. Time is your best asset. Let's quickly recap the 5 essential habits we've covered and motivate you for the next steps. Remember the 5 habits: create a budget, build an emergency fund, avoid high-interest debt, invest consistently, and harness the power of compound interest. Check these off your list one by one. Your financial journey is a marathon, not a sprint. Start small, stay consistent, and commit to these 5 habits. The rewards are worth the effort: long-term wealth, reduced stress, and the ultimate goal, financial freedom. You can do this.